For years, the narrative's been set in stone. We've all heard it. We've all heard it over and over. Bitcoin is digital gold. It's a safe haven. It's a hedge against geopolitical chaos. But when the rubber meets the road, when the shit hits the fan, right? We see what people are truly made of, what it actually is. Because while the maximalists were busy celebrating Bitcoin's climb to six figures, a massive geopolitical earthquake in the North Atlantic just flipped the script. The Greenland episode, you know, the tariffs that Trump is going to impose on the EU because we want to buy Greenland and they're like, no, don't do it. This wasn't just a diplomatic dispute. It was a stress test for the world's financial assets. The results are in. Bitcoin didn't just fail the gold test. I mean, it failed miserably. It completely shattered that myth. I mean, it's gone. Bitcoin is digital gold should not be said anywhere ever again. Because today we're going to dive into why Greenland has exposed Bitcoin as a risk-on asset. Okay, it is not the safe haven. Digital gold, right? That comparison, guys, is dead for good. It is dead. I mean, let's just get into it. So here, first, let's look at the context. What are we talking about? Let's level set so we're all on the same page. We are seeing unprecedented geopolitical tension over Greenland, right? Donald Trump has ramped up the rhetoric to acquire the island. He wants to buy it, right? He wants to buy the island. I mean, we print enough money anyway. Let's print some more and go buy Greenland. Cool. All right. He's citing national security concerns over Russian and Chinese influence in the Arctic. He's even threatened a tariff war against the European countries. And that threat just became reality. If they don't stop messing around, he says 10% February 1, baby. So guys, whenever there's uncertainty, wars, tariff threats, geopolitical uncertainty, investors look for a place to hide. This is the safe haven trade. Gold, silver, other precious metals. And what people were trying to say, Bitcoin. Because Bitcoin is supposedly digital gold. You know, if it was, we'd expect it to skyrocket when the US starts threatening, you know, European allies over taking over an island, a massive island, but taking it over, right? We would expect Bitcoin to skyrocket along with gold and silver. Well, guys, the numbers told us a very, very different story. Because over the last 3 months, okay, as the Greenland controversy has raged, gold did exactly what it's been doing for 5,000 years. It acted like a shield. Gold prices have surged over 7%, hitting a staggering all-time high of almost 4,700 per ounce as of January 19th. Guys, it's going to 5K. All right, mark me down. That's my prediction. Gold is going to 5,000 bucks. However, Bitcoin, the supposed digital safe haven, the digital gold, did the exact opposite. Because gold is hitting record highs, Bitcoin dropped nearly 17%. In fact, Bitcoin's currently sitting about 25% below the October peak of 126,000. So guys, the argument is simple. If Bitcoin were truly digital gold, it should move with gold during a crisis. Seems logical. I mean, yeah, it seems logical. Yeah. Okay, we all agree. Instead, Bitcoin moved with tech stocks and speculative assets. Because when the world gets scared, people buy gold. And when the world gets scared, apparently, they sell Bitcoin. And this makes Bitcoin a risk-on asset, not the store of value that people have been pushing down our throats for years. Okay? Like I said, when the rubber hits the road, we see what people truly value, what they really do with their money versus what they say they're going to do. So the price action of this, it's only half the story. Because one of the biggest selling points for Bitcoin is that it's unseizable, right? No one can take your Bitcoin. Proponents say the government can take your gold, but they can't touch your private keys. We might have to agree to disagree on that one because Bitcoin is actually kind of easier to confiscate than gold. Think about it. The United States government's new strategic Bitcoin reserve isn't being built by buying coins. on Coinbase or Kraken. It's being built through the seizure of assets. So our strategic reserve is being built by seizing an asset that has been sold to us as not being able to be seized. Let's think about that. Because federal agencies have already forfeited billions in Bitcoin from various investigations. So unlike gold, which you can, bury in the backyard or hide in a physical vault, every single Bitcoin transaction is recorded on a public ledger. And modern tracking tools can easily follow that flow, right? Through exchanges, wallets, and with being very precise. They know exactly where that stuff is going. So like desperate governments, right? Desperate governments will choose the path of least resistance. And in the digital world, the path of least resistance is a traceable digital ledger. So this isn't the first time, we've kind of seen this come up, right? I don't know if you've seen any of my other videos, but I've kind of been a critic of MicroStrategy. Okay, Saylor's MicroStrategy. Okay, so in my view, the massive accumulation of Bitcoin by corporations is not a move towards stability, but it's promotional, right? It kind of pushes on that greed and FOMO angle. So to be clear, I'm not against Bitcoin. I just want us to call it what it is. It is a high stakes, high reward digital asset. It's a play on technology and liquidity, but it is not, and we've just seen it, it's not a hedge against a geopolitical meltdown. If it was, it would be spiking to new all-time highs right alongside gold, silver, and other precious metals. So guys, the Greenland episode has proven that when the chips are down and the world's on the brink of a trade war, the smart money still reaches for that yellow metal, not the digital token. So where does this leave us, right? What do we do? Is Bitcoin actually digital gold, or is the narrative dead? If you look at the price action during the Greenland crisis, it's hard to argue otherwise, right? The money, when people do with their money in time of a crisis, speaks volumes. It will crush any narrative. Bitcoin might be the future of finance, but gold is still the king of fear. I like that. That's got a ring to it. It's the king of fear. So what do you think? Did the Greenland dip prove Bitcoin's just another tech stock, another risk-on asset? Or is this just a temporary decoupling? So let me know in the comments below. And don't forget, guys, like, subscribe, and turn on those notifications for more deep dive into the changing world of finance. And I'll see you in the next one.